Hello, welcome to my channel today. This is King's Tutorial. If it's the first time, kindly like, comment, share, and subscribe. Okay. Now today we want to see royalty accounts in accounting. Okay, this is a very important topic. So, what is royalty? Before we can look at how to prepare its accounting. Okay, what is royalty? Now, royalty is a name that stands for the amount that is being paid to an owner of a monopoly or a privileged right. Okay, those that are author or those that invent made some invention. There are some right that is bestowed on them so that they can enjoy the benefit of invention. So those rights bestowed on them can be called what we know as copyright or patent right, or what we call mineral right. Okay, so those rights, whenever they allow another person to use it, that person in which they are allowing to use it, we have to pay an amount to them, and that money they are paying to them is what we call royalty. Okay. Now, for instance, if we have an individual that wrote a book or that wrote a song, for instance, let's say we have an individual which can be the owner. Okay. Now, the owner of a book might give another person. Now, this owner has a right. Okay. The owner has a right called copyright. And we have three types of right basically. We have the copyright, which is for author and for musicians. We have patent right, which is for inventors. Those that invent some things. And we also have what we call mineral right. That is those that have some mineral resources. Now, if an author writes a book, now probably he might approach a publishing house to help him publish the book. Now, the owner might give his right, normal right, to the publishing house. The publishing house can be called the user. Okay? Now, giving him the right to mass produce that commodity. In return, the user will have to pay what is known as a royalty, because it cannot be given for free. Okay, that is the sweat. So royalty stands for the amount to enjoy the rights of an owner. Okay, the essence of giving owners rights is because so that they can enjoy from their benefits, they can benefit from their inventions. Okay, because if it is bastardized and used anyhow, you will not see some persons that might venture into inventing some items that will be beneficial to the world. Okay, so the owner can be known as also the landlord, or can also be known as the lessor or the grantor. Okay, these are names as the owner of that right. So now, once it gives the right to the user to make use of that right for a specified period of time, okay, now this user can be known as the lessee, or can be known as the tenant, or can be known as the grantee. Okay, can be known as the grantee. So that is royalty. Okay, so there are certain terms that are important to be known in while preparing royalty account. Okay, so this also serves as a situation. Remember, in your house you're staying, if it is not yours, remember you pay what we call rent. Why are you paying the rent? Because the building is owned by the landlord. The landlord has a right, but he is giving it to you for a specified period that has been agreed by both of you. In return, you're enjoying the right to use those property. You pay what we call rent. It's the same thing we are talking about. Okay? So there are many terms that is associated with this that we are going to look at now, so that while we start to venture into preparation of royalty account, it might not be strange to us. Okay? Now, some of the terms that are important is one, who is a landlord? Who is a landlord or the lessor? Landlord or lessor or the grantor. The landlord is the owner of that right, the owner of the property, the inventor of that invention. Okay, is the owner that is bestowed legally with the right. Okay, that is what the landlord, and is the one that is entitled to the royalty to be paid to. Okay, that's the landlord. So, in case you hear landlord, you know what it means. The next one is the lessee or the tenant or the user or the grantee. So who is a lessee? The lessee is the user of the rights of the landlord. The lessee or the grantee or the tenant is the user, is the one making use of the rights of the landlord. Okay, so we have the third one, what we call actual royalty. Now, the actual royalty is the actual utilization of the activity or sales. Now, for instance, if probably the owner has a plot of land in which he is leasing it out probably to the user, which is the lessee, to make use of. So they might come to an agreement, okay, and say, okay, for specified period of time, if you're making production or sales, that is the two ways in which an output can come out from. It's either it's for production or for sales. Okay, so they said if you're using the production or the sales, you are to pay me a certain amount of money at each time. You have to pay me a certain amount of money from this particular item. Okay, so that amount that is gotten after using it is what we call the actual royalty. Okay, once we go more, we understand that it's called the actual royalty. That's the actual royalty that is gotten from the utilization of the right. Okay, that's the utilization of the right. For instance, now, if they said in a farm, you are to produce that in a farm that they produce, let's say, for the first year, 8,000 tons. The second year, 10,000 tons. The third year, 15,000 tons. The fourth year, 20,000 tons. Now, these are the actual royalty. That is what's gotten from the utilization. Okay. Now, the fourth one is what we call minimum / dead rent. It is called minimum rent or it is called dead rent. Now, what is the minimum rent? The minimum rent is the minimum amount of money that is payable to the landlord. For instance, like I said before, the landlord and the user and the lessee will have to come to an agreement. Okay, you are making use of my product or you want to sell my books. Okay, for each book you are selling, this is the amount of money you are to give me. The minimum. You cannot give me below that amount, but you can give me above, in case there's a time for surplus. You can't give me below, but you can give me above. Okay, so let's say for instance now, the minimum, we call it minimum rent or dead rent. The minimum rent that is being agreed can be, let's say, 15,000. If it's 15,000, it means that every year, while this user is making all this, he's supposed to pay nothing less than 15,000, because that's an agreement. The landlord is not, it doesn't concern him how much you make from it. What is his concern is that you guys have come to an agreement and you've decided that, okay, make use of this, no matter how much you sell this, but look at the amount you are going to pay me for each. And that amount you're going to pay me for each is what we want entitled to my the minimum amount I want to get. Okay, so that is what we call minimum rent. That is the minimum amount that is payable to the landlord. It cannot be below. You can't pay the landlord below that amount, that minimum rent. but it can be paid what above. Okay, so that is minimum or what dead rent. Now there's what we call short workings. Short workings. Now what are short workings? Short workings is the excess of the actual royalty over the minimum rent. Okay, the excess of the minimum rent over the what? The actual royalty. Now, the excess of the minimum rent over the actual royalty is all called short workings. Now, what does this mean? Now, remember we said the 15,000 that is supposed to be agreed. That is agreed by the landlord to be paid. Okay, that is to receive. Now, if any year the user make less than this, okay, so it means that the minimum rent is more than what he has made for that particular year. The difference is what we call short workings. Okay, short workings. But it doesn't concern the landlord. You have to make up. If any year you make less than the minimum rent, you have to make up, look for money, make up it and pay. Because that's what the minimum amount. But the difference between, for instance now, if they agreed that the minimum rent is 15,000, so the short workings will be 15,000 minus 8, which will give us what? 7,000. Which will give us what? 7,000 as short workings. It means that for the user, it is a loss to him because he got 8,000 in what? Probably the production, but he's supposed to be what? Paying the what? The user and the landlord 15,000. So the excess of this minimum rent over the actual royalty, these are the actual royalty, is what we call what? Short workings. Okay, is what we call short workings. So the user have to get, if it is 8,000, remember he's supposed to pay 15,000, so he has to look for money elsewhere, discover money to pay up to this amount. Okay, so the difference between the minimum rent over the what? Actual royalty is what we call short workings. Okay, the next one is called surplus. Surplus. The same way we have the excess of minimum rent over royalty, which is short workings. Also, the excess of the actual royalty over the minimum rent is called surplus. It means that in that particular year, the user made more than he's supposed to pay. For instance, in this situation now, 20,000. He made 20,000 and he's supposed to what? To pay, let's say, 15,000. The surplus is what? The difference between the actual royalty, the excess of the actual royalty over the minimum rent. So you see, the actual royalty exceeds what he's supposed to pay. So the remaining 5,000, we call it what? Surplus. Okay, the remaining 5,000 is called what? A surplus. While the short workings is the excess of the minimum rent over the actual royalty that is supposed to be paid. Okay, that's surplus. The next one, we can have what we call short workings recoup or recover. Seven short workings recoup or recover. Now, like we said before, there are some years in which they will have short workings. Now, the landlord, based on his good heart, may decide that, okay, due to the fact that there are some years you might make below, and you have to look for other money to put together to pay me my minimum rent, in which we call it what? Short workings. So the landlord can decide that, okay, probably if you make a short workings, I'm giving you a privilege of probably 2 to 3 years. If you make surplus after those short workings, you can recoup. So for the landlord, it is like an expense to him. So he's giving the privilege to the user to get back that money he has paid. For instance, now in this situation, the user made short workings of 7,000. That is, he made 8,000, but he's supposed to pay 15,000. So he's making a loss of 7,000. Here also he made 10,000. He's supposed to pay 15,000. So he's making short workings of how much? 5,000. Here also 15,000. He's paying 15,000. None. So if there is short workings recoup in a certain amount of years, probably let's say 2 years, he might decide that okay, if it's 3 years, wherever he is making surplus, in this situation now there's surplus 5,000, he can get back the money to the user based on the short workings, the expenses he have made. Okay, because this is an expense to the what? To the user, because he realized 8,000 but paid 15,000. So the landlord might, due to his good heart, decide that okay, for 2-3 years, recoup your short workings, recoup those money from those royalty. That is when there is surplus, because the landlord must get his minimum rent. Okay, then when there is surplus, that is the excess of the actual over the what? The minimum rent. When there is surplus, they can recoup most of those expenses in terms of short workings that have been previously made. It depends. It can be 2 years, 3 years, depending on the agreement. So you can check that in the question when it is given. Okay. Now, there's also what we call short workings elapsed. Short workings elapsed or irrecoverable. Okay. What is short workings elapsed? This is a situation whereby definitely you have exceeded the number of years given and yet you have not recovered all the money. For instance, if in this situation now, the landlord said for 3 years or for 4 years, after the first short workings have been made, this is the first year, second, third, and fourth. So if surplus was made here, because the actual is more than the minimum rent, okay, so it means they made surplus of 5,000. So, and you check here, the short workings is 7,000, 5,000, that is 13,000. And they said the number of years is 4 years after the first short workings. That is first, second, third, and fourth. It means that the 5,000 and the surplus cannot recoup everything. It will just recoup 5,000 out of 13,000. Okay, the remaining 7,000 we have to what? Elapse or irrecoverable, because the number of years in which the privilege was given, the surplus cannot cover for it. So they have to what? Elapse those ones. So that is what the short workings was. Elapse or irrecoverable. Okay, so then there's all called 9. Payment to landlord. Okay, the payment to the landlord on the lessor. It is just in the actual royalty. Let's say a royalty schedule. We'll see that the actual amount that is being paid, and it will not be less than the minimum rent. In a particular year, it can be more than the minimum rent. Okay, for instance, now if after they have elapsed the 5,000, let's say this is for the 5th year, they now made 25,000. That's the final year, and the number of years they gave for that to recoup it is 4 years, and it has elapsed. This is the last year. The amounts that they will pay to the landlord will not be 15,000. It will be what? The whole 25,000, since it is the last year. Okay, so the payment to the landlord is the actual amount that is paid to the landlord, which is not below the minimum rent. Okay, it can be above the minimum rent, but it's not below the minimum rent. Okay, now another part I will add is what's called royalty schedule or chart. The royalty schedule or chart. And the royalty schedule is a table that shows the calculations involved with royalty before it is posted to the ledgers. This is important so that while you're posting to the ledgers, it is very easy and simple. Okay, it will cover the year. The first, it will be year. The second, the output. The third is the royalty worked out. Okay, because the output or the sales multiply by the number, by the naira, by the currency value. Then the next column will be the minimum rent. Then the next column is short workings, then surplus, short workings recouped, short workings elapsed, and the payment to the landlord. Some other texts have different royalty, different the way they prepare it. It is not constant to this what I've said now, okay? But it is important to use this one because it's comprised of all. We are going to see the royalty schedule and see a question that relates to that, okay? So these are basically what you should know before we start preparing the royalty account. Now we've talked about the landlord, who is the landlord, the lessor, and the grantor. We have talked about the lessee, which is the user. Okay, we said the landlord gives the right of his own invention or property to the user. The user used it and pay what we call what? Royalty. Okay, and that royalty is what the agreements that they will have to be made. So we have seen the landlord, the lessee, the actual royalty. Okay, that's the utilization or the activity that is being made the actual. So we have the minimum or what we call dead rent, the minimum amount that is supposed to be paid to the landlord. We have seen short workings, surplus, short workings recouped, short workings elapsed, payment to the landlord, and royalty schedule / chart. Now let's see how this royalty schedule looks like. Then we'll see an example relating to it. Now, so the royalty schedule or the chart. So the royalty schedule or chart looks thus. We can have the year, which can be 1, 2, 3, 4, depending on the number of years. And the next, we can have the output or the sales made. Okay, the output, which can either be that was sold or produced 2,000, 3,000 tons, 4,000, 5,000. Then the royalty, which is the actual royalty. They're going to give you the amount for each. Okay, let's say if it is giving, let's say $1 for each that's been sold or produced. It means this will be 2,000 times $1. This will be 3,000 times $1. This is 4,000 times $1. And this is 5,000 times $1. So the amount was given there. The next one is what we call the minimum rent. Okay? The minimum rent. That's the amount that is being agreed to be paid. We have seen that. The next will comprise of the short workings. Okay? While the next can be the surplus. Then the next can be the short workings recoup. The next can be the short workings elapse. And this can be payment that was made to the landlord. Okay? Now this is how the charts look like, or the schedule. Now this will help you to simplify any question. So while you're posting to the ledger, you just look at it and it will be easier. Okay? Now we are going to see a question on how to practically solve, to prepare the chart first. On how we can prepare the chart first before it is posted to the schedule, before it's posted to the ledger. Okay? How the chart is being produced. This is how it looks like. But we're going to see a typical question on how we do that. Advice in any question, do it first before you post to the ledger. So we're going to see that now before we looked at how it can be shown or posted to the ledger. Okay, so please, if you have not liked this video, you see what we are doing is very important. Okay, we have different series on this, So like, comment, and share this video. If you have any question, put it down there. And also, if you want to join our class, our WhatsApp class, different range, just put it down there. The King's Tutor, add me to your WhatsApp class, and I'll take you there. And you add for free. You are going to learn different aspects for free. There are many things we are doing in the group, the WhatsApp group. Okay, So just write it there, the King's Tutor. Add me to your WhatsApp group, okay? And you to be what added. Just comment below in the comment section of my YouTube channel, okay? Now let's see a question that relates to royalty account and how to prepare this chart before we see other things. Thank you very much. Please like this video, like it, so that we can get to other students. Let's see the question. Okay, now let's see the question. Now, the question said, the King's Tutor released a colliery on 1st January 2010 at a minimum rate of $15,000, merging into a royalty of $1 per ton, okay, with a stipulation to recoup short workings over the first 3 years. Now, they are saying that they can recoup in case there is a short workings over the first 3 years of the lease. Now, the output for the first 4 years of the lease were 8,000, 13,000, 21, 18,000 respectively. Draft the royalty chart. Now, in questions like this, don't be bothered about the rigmarole. Just pick the items that are important. And the first one said the minimum rent is $15,000. That's the minimum rent. Now, merge into a royalty of $1 per ton. And these are the amounts that they will have to pay for 1 ton. Okay, $1 per ton. Okay, and they said to recoup short workings for over the first 3 years of the lease. Now, this one is saying over the first 3 years of the lease. It is not saying that after the first short workings. It means from the first payment over the first 3 years. If there's any short workings and any surplus afterwards, you have to recoup. Okay, so the output of the first 4 years were as follows: 8,000, 13, 21, and 18 respectively. Draft the royalty chart. Now, this is how the royalty chart looks like. We saw that before. Now, here is the output. The royalty worked minimum rent. MR stands for minimum rent. SW stands for short workings. Surplus, short workings recoup, short workings elapse, and payments to landlord. Okay, in abbreviation. So the first thing you have to do, record the output. Now look at the output. The first year was 8,000. 8,000. Second year is 13,000. The third year, 21,000. And the fourth year is 18,000. Okay, now I want to get the actual royalty. They said that you're going to pay me rent of $15,000, merging into a royalty of $1 per ton. Okay, so they're saying that for each ton is what? $1. So get the actual royalty. It is multiplying the output by the what? The value. That's $1. So we have 8,000 times $1 equals $8,000. The first one. The next one, we have 13,000 times $1 equal $13,000. Remember, all these R's are not in any currency value. Okay, they are output. So it is multiplying by the currency that gives it what? The amount. That's the actual royalty. So this 21,000 times $1 equals $21,000. And 18,000 times $1 equals $18,000. Now, let's go to the minimum rent. Now, from the question, they said they're going to pay minimum rent of what? $15,000. So, for each year is $15,000. Each year, $15,000. Each year, $15,000. Each year, $15,000. Okay? The next one, short workings. I've said the short workings is the actual subtracting the minimum rent. Okay, or the minimum rent subtracting the actual. So the actual is 8,000 and they're supposed to pay a minimum rent of 15,000. So the short workings they have is what? $7,000. Okay, there was no surplus and no short workings recoup, no elapse. Then payments to the landlord who said they cannot pay anything less than the minimum rent. Okay, so we have $15,000 that was paid. Okay, the next one, we have actual of 13,000. Minimum rent is supposed to be paid for 15,000. So the short workings is $2,000. No surplus, no recoup, no elapse. They will not pay anything less than $15,000. Now remember, they said to recoup short workings over the first 3 years of the lease. And this is the first year, the second and the third year. If we don't recoup anything here, if we recoup a little, the remaining should be elapsed. And the third one, we have 21,000. Okay, now 21,000, they are paying minimum rent of 15,000. It means the actual exceeded the minimum rent. Okay, so there's no short workings. There's no short workings because the actual is more than the minimum rent. Okay, the only time there's short workings is when the minimum is more than the actual. So the surplus, it means they had a surplus. So 21,000 minus 5,000 will give us 6,000. That's $6,000 surplus. So we have to recoup. Remember, we have short workings of 9,000 here. Okay, so how much can we recoup? So we can just recoup up to what? 6,000. At 6,000 because that's the surplus that is there. So if we recoup 6,000 and short workings is 9,000, and it said it is what? Just for 3 years. That's 1, 2, 3. This is where it stopped. So the remaining 3,000 will be what? Elapsed. The remaining 3,000 will be elapsed. Okay, because it has reached the minimum years that the privilege was given, or the years the privilege was given. So they are paying to the landlord nothing less than the minimum rent, which is 15,000, since they have other years. So the other one now, 18,000, that was realized, and the minimum rent is 15,000. There was no what? Short workings. Okay, now the surplus is what? $3,000 because the actual reality exceeded the minimum rent. So they had surplus of this. Now, are they recouping anything? No, because that's the last. They have elapsed the short workings previously. So they are not recouping anything. Okay, and nothing is being elapsed. So what are they paying to the landlord? I told you in the previous that whenever it is the last, you pay the total amount of money that was realized when there's nothing to be what? Recouped. Okay, so they are now paying 18, the total amount that was realized. So it is now $18,000 that is being paid. The total amount that was realized. Okay, so this is the payment to the landlord. This is how much they paid for each. I told you they cannot pay anything below the minimum rent. Okay, so that is how to prepare the royalty schedule or chart. So this from here now, we can start preparing the ledger account. Okay, so if it's the first time, please like this video, comment, share. Now, comment below the King's tutor and need more examples. Let's see more examples. It is the response I get back. That is when I will know if I should do more videos as regards the chart before going to the ledger. Okay, the King's tutor need more examples on this before we move to order. So the next video we're gonna see the ledger, how to post all this, because this is just a chart. They will ask us to prepare the ledger. Where are we posting to? We'll have to see where we are posting it to. Okay, please like, comment, share this video, and also subscribe. Thank you very much. Now we have different series on accounting. Check in the playlist to see others, and we're also on TikTok. We're on Facebook, Instagram. Just type the King's Tutor in this platform and you'll see us there. Just follow us, like, comment, and share our video. Okay, so if you want to be in the class, in the WhatsApp group where we are doing many things, answering questions, solving assignment, and different aspects, just type the King's Tutor in the comment section. Add me to your WhatsApp class. Okay, thank you very much.